Well, joining us for this discussion is Azar Jameen, Chief Economist at Econometrics. Azar, with my colleagues in the media industry, I suggest they read two things. Warren Buffett's letter to shareholders and Jill Marcus's 2-monthly report from the Monetary Policy Committee. And there's a lot of meat in it once again today.
There's a lot of meat. You covered a lot of ground. That was quite nice because there was really no one who expected there to be any change. So it was nice to read the meat and the consolidation of a lot of information in a well-presented manner.
So you said everybody knew there was going to be no change. Once before, everybody knew there was going to be no change, and there was?
Not quite. I don't think. You know, there wasn't even a build-up to this MPC meeting as there normally is, because people said, well, what you going to say? The rand's weak, therefore inflation risks are there, and economic growth, we worry about the downside, therefore the balance is that we'll have no change in interest rates. However, I read into the implications of this, a shift in the probability of interest rate movements towards the upside. And the reason, and that's my interpretation, why I say that is because the inflation forecasts were pushed upwards, and I'm not sure that they were pushed up sufficiently.
But didn't she say that this is a temporary thing in pushing up the forecast because the demand is so weak in the economy?
She said that, and now that is where I tend to differ. I don't know that demand is quite as weak as she is suggesting. I've been saying for a long time that those first quarter GDP figures distorted what was really going on in the economy because they were influenced by the number of working days, which were far fewer than the same time last year, and we're going to see a bounce back. Well, we are already seeing a bounce back in your retail sales, your manufacturing, your wholesale sales figures today, all of which are surprising everyone much stronger. And then they forget about those and concentrate on, but first quarter GDP growth was 0.9%. And so I think that there's a chance that in a few months' time, people will say, hell, but the economy wasn't that weak after all. Obviously, she took her cue from the International Monetary Fund, which revised its forecasts downwards sharply. But I think they may be overdoing it.
Interesting. You know, from a company point of view, I keep close, as you know, to companies. Difficulty pushing through prices, that's certainly the case, and there's very stiff competition out there, particularly on the high street. So these dynamics at play may well be bolstering demand, if you will, particularly in the retail arena, whereas otherwise it may well have been weaker.
I tend to agree with that. I'm not for one moment suggesting that there aren't pricing pressures that are restricting the pass-through effect of currency depreciation. There's another very important factor, and that is the rand has not depreciated in one straight line the way it did in 2001 and 2008, for example, to generate an inflationary psychosis. But all I'm suggesting is that economic growth is not quite as soft as is being made out to be as to why interest rates might come down. And that's why I'm saying I think that you'll see the balance of interest rate risks, I think, has moved more to the upside than the downside.
The rand's trade-weighted decline of 11%. It's only the Reserve Bank who kind of calculate. Everybody can calculate it, but they officially give us. So against all currencies, 11% so far this year. Sometimes that helps in certain areas.
Oh yeah, it should help our competitiveness and therefore our exports if the miners allow us to benefit from that. But I think the manufacturing sector is already starting to reap some of those benefits. We've seen it implicitly in some of the trade figures, especially to the rest of Africa. We're really reaping quite good benefits. The trouble is that that's not enough to see the current account deficit declining sufficiently. And the reason I say that is because We're still importing a lot of machinery and equipment for our capital projects. And secondly, there's another element to the current account, and that is the payments on interest and dividends to foreign shareholders and bondholders. And as we know, they've bought a lot of our shares and a lot of our bonds in the last few years. We've been very thankful for those inflows. They've helped to accommodate the current account deficit, but they generate a countervailing increased servicing requirement.
I'm wondering if there's a subtle jaw behind the scenes, because Moody's came out with a surprisingly positive tone. And I'm just wondering whether there's some sanity prevailing over here, that, within government, they were talking about fiscal responsibility and so forth, but it was a very mild review from Moody's. And I just think that maybe government behind the scenes is perhaps getting ready for more fiscal discipline than we actually realize.
I wouldn't be at all surprised, and I think we should be very grateful, and it's something that we shouldn't lose sight of,
yes,
is that despite all the problems that we face in South Africa, we've got a national treasury that has got its finger on the pulse.
The figure that jumped out at me was unemployment officially is now 25.2% as against 24.9%. Now that's only 3 percentage points, but it's or 0.3%. But if that was in another country, people would be starting to panic about that, particularly youth unemployment, Azar.
Yes,
53% now.
Of course, but the difference between us and other countries is that most of the unemployed people in this country are unemployed because they are unemployable. And that is part of the reason, fortunately, why they are not rising up against this, is because they, compared with what's going on in Greece and Spain and so on, where you've got people with university degrees left, right and centre who can't find jobs. That's not the case in South Africa.
And we could fix it though. Maybe with a little adjustment on labour legislation as a starting point.
That's part of it. It's not the entire part of it. We have to really start educating people properly.
Well, the Rand is always something that many people will pay attention to. Your take from today's discussions, and there was a lot of meat elsewhere, as we mentioned, what is it likely to do to the currency traders? Or once the currency traders have had a chance to sleep on it, what are they likely to do tomorrow?
I don't think that there's a clear message for the Rand from this, the fact that if people interpret it the way I do, then it should be favourable for the Rand, because it means more likelihood of interest rates eventually rising rather than falling. But I'm not convinced that people will read my interpretation into these figures.
It's interesting there, Alec, because I keep a close watch on the crosses rather than our fixation on the euro or the dollar or the pound or the yen. And it's interesting, if you look at us against the Indian rupee, the rial or the Turkish lira, over the last 5, 6, 7 years, we followed very much in line. There was a period late last year where we were out of kilter, and the VIX showed us that. But in fact, with this weakness against the third countries, we aren't as weak as we appear to be against the hardcore currencies, shall we say.
As you say, though, there was a period during which we depreciated far more than the others. And I think that's, and Jill Marcus referred to it, it's specifically we've got a much bigger current account deficit.
Yes.
Than those other countries, although India's current account deficit's also starting to expand.
So just to close off with, Jill did say that the dominant news of the past 2 months was the Federal Reserve's
without doubt
beginning to get more more tighter on the quantitative easing. How did you read that, and what should investors be, or how should investors interpret it?
I think she was absolutely spot on. I mean, it's just been a Bernanke, left, right and centre for the last 2 months. And I think he's playing a game. I think he's just trying to keep the show on the road without allowing an asset price bubble to build up. So whenever he sees asset prices rising too far, he'll make a hawkish statement and that'll deflate the bubble. And when he gets a shock that the reaction is too severe, he then comes with the other reaction. So again, I think it's we're looking for the Rand to remain more or less somewhere between 9 and 10 Rand over the coming year.